In Lesson 12.2, we'll be determining payroll tax withholding. Demonstrate the process for determining federal income tax withholdings for your employees. Demonstrate the process for calculating Social Security and Medicare taxes. Explain the benefit of funding medical and retirement plans with pre-tax contributions. Taxes based on the payroll of a business are called payroll taxes. A deduction from total earnings for each person legally supported by a taxpayer, including the employee, is called a withholding allowance. Any amount withheld from an employee's gross earnings is called a payroll deduction. This is an employee's withholding allowance certificate. It's called a W-4. Anytime you have a job, you have to fill out a W-4. You have to fill in the name and address, your Social Security number, your marital status, your withholding allowances. So if you were married with 2 children, you could claim 4 withholding allowances, and you would have to sign and date the form. This helps the employer determine how much is taken out of your paycheck. This is the employee's income tax withholding chart for single people. This is the employee's income tax withholding chart for married people. You need to select the appropriate table, whether it be single or married. You locate the employee's earnings for that pay period and the number of allowances, and where those two intersect is the amount of the withholding. A federal tax paid for old age, survivors, and disability insurance is called Social Security tax. A federal tax paid for hospital insurance is called Medicare tax. The total gross earnings year to date for an employee is called accumulated earnings. The maximum amount of earnings on which a tax is calculated is called a tax base. There are voluntary deductions from your earnings. A retirement savings plan approved by the Internal Revenue Service that provides individuals with a tax benefit is called a qualified retirement plan. A 401k is a qualified retirement plan sponsored by an employer. An individual retirement account is a qualified retirement plan that provides most individuals with a deferred federal income tax benefit. A Roth individual retirement account, Roth IRA, is a qualified retirement plan that allows tax-free withdrawals from the account. Where does an employer get the information used to determine the amount of federal income tax to withhold from employees' earnings? Form W-4, the Employee's Withholding Allowance Certificate, which everyone needs to fill out when they start a new job. Employee federal income tax withholdings are based on what 2 factors? Employee marital status and number of withholding allowances. Does the employer or employee pay Social Security tax and Medicare tax? Both the employee and employer pay Social Security tax and Medicare tax. What is the difference in the tax impact of contributions between a 401k, an IRA, and a Roth IRA? Only the contributions to a 401k and an IRA are deducted from earnings before payroll taxes are calculated. Are the withdrawals from a 401k, an IRA, and a Roth IRA subject to income taxes? The withdrawals from the 401k and an IRA are subject to income taxes. Withdrawals from a Roth IRA are tax-free.